Oh my God, it's so cold outside. It hurts. You know what hurts even more? Being on the wrong side of the market. If you were watching my videos, you wouldn't have that problem. In today's video, I'm going to explain exactly what we did to the market, why it was not recorded, because what we did was actually, it might be even borderline illegal. All right, so we're going to take a look at what the next steps are for the market. We're going to take a look at the S&P, the NASDAQ, the large tech stocks, the VIX, the bonds, all that good stuff. All right, so without further ado, let's get started with the video. All right, so first and foremost, these are the results of our swing trades from this morning. As you can see, things were pretty good. Tesla, Nvidia, the overall market were all bullish. We were long all four of these. And what was I saying in yesterday's video? You want to start leaning short when bulls start to take profit. As soon as this occurred, what do you think we ended up doing? First and foremost, this is a daily chart of Nvidia. What did I show yesterday? An inverted head and shoulders with a bull flag. Where did we end up going long on Nvidia? On January 2nd. Because I knew that Nvidia would be the leader in the pull to the market to the upside. Nvidia would help bring the market up. And I explained the reasons why. Number one, we have an event occurring this week with AMD and Nvidia. They're going to be showcasing their technology. That's bullish. You buy the rumor, sell the news. Heading into a news event, you remain bullish. Heading into earnings, you are bullish. Heading into earnings. After earnings, that's when, the market ends up being a bit choppy. But heading into news, heading into earnings run up. News run up. What ended up occurring today? We gapped up and we're opening and closing outside of the upper level of the Bollinger Band here. This is not an automatic reason to go short. Because when you're trying to short extreme buying pressure, it's not as easy as it is to go long extreme selling pressure. Because the market, I'm saying a lot, but just bear with me here. The market tends to want to rise. When you go long into weakness, it's much easier to catch bottoms than it is to try to short strength. Okay? That's number one. So obviously we're very overextended to the upside now. I don't know what happened to my mouse. We're very overextended to the upside now. Correct? But damn, look, we were long. But yeah, so as you can see, if we just extend this to the right, this is, it looks like it's trying to retest this trend. I don't know why it didn't work, but it looks like it's trying to retest the trend line. Okay? And this is another, oh, I extended it to the wrong side. So we have been monitoring this uptrend level on Nvidia for quite some time, since this bottom on October 5th. You can see that it worked amazingly. Multiple times as support, multiple times as resistance over here as well. Worked fantastic. Now it looks like it wants to come back and retest it. That is yet to be seen if that occurs, but damn, this is looking pretty good. Okay, so far, we made money on Nvidia, we made money on Tesla. Let me just show you guys Tesla, and then I'll go ahead and basically explain what the next steps are. Okay, so Tesla, I was showing how, first and foremost, I was basically explaining how all of these stocks had a little bit more room to the upside. That's why it made sense to remain bullish, correct? So, what did I say? 420. If we hit above 420, then we were going to see 435. But I wasn't expecting Nvidia to gap up like this. So I am not holding on to Tesla anymore. It is what it is. I'm still holding on to Nvidia. I probably sold Tesla a little too early. I don't really care because the contracts were up over they were up over $1,800 a contract. So I'm not going to just hold on to Tesla and be like, oh, let's play around. There's no point. So, because the contracts were also very expensive. So, yes, I still think Tesla can see 435. It will most likely break above these highs, honestly. But that's my thought process. Immediately what's going on is, because we gapped up and we had a really, really strong rally in these past few days, a little bit of selling pressure. Nvidia, being the biggest winner here, led the move, right? Nvidia was green on January 2nd. It had a 3% green move. What was going on the S&P 500 on January 2nd? The S&P 500 on January 2nd, this was a red day. On the NASDAQ, what was going on January 2nd? It was a red day. Nvidia helped bring the market up. Now that Nvidia is really overextended to the upside, being long being long on Nvidia up here becomes a bit more difficult. It can stagnate, but I don't think it's going to just continue to rise up like this because it's overextended. Does that make sense? So because the leader is technically overextended now, it was worrisome for the overall market. And let me just now bring this back. Because this was a great opportunity to start taking profits if you were a hedge fund, the entire day I was leaning short. I leaned short the entire day. From 9:30 something, I was leaning short the entire day. We were averaging in. I got into 596 puts, 597 puts, 599 puts, 598 puts, QQQ, everything. I just continued getting into puts. Why? Because this move was not going to sustain itself to the upside. The risk reward to be a bull up here made absolutely no sense. We were long on the rip to the upside. And let me just show you guys a recap of what I was talking about. Okay. So, let's go to the daily chart here. So, essentially, right, the way that the market moves intraday has a lot to do with where it's going on a larger time frame. Okay. So once again, as I was explaining in yesterday's video, I was using Tesla, right? For Nvidia, for example, right? Where would it make more sense? So if you want to look for a place to take profits on your longs or a place to take profits on your puts, you need to look for a place where bulls and bears are going to hit their profit target. So if you're a bull, if you are a bull, right? You know what? Say, for example, you're not holding on to a position. All right, let's just make this very, very simple. If you are not holding on to a position, you have to look for where bulls or bears are going to start taking profit. So say, for example, I'm not holding on to a position over here. All right, say we didn't enter into this trade here. You want to enter into a position. The easiest place to do that is to look for where either bulls would take profit or where bears would take profit. Bears would take profit on a break of support into a level of support here after a move to the downside. This is where bears would take profit. Because bears would take profit down here, what ends up happening to the stock? Buyers start stepping in. The shorts start to cover. And because we're at a level of support, because this is a downward target for bears, buyers start to step in and it becomes a better longing opportunity. Okay? If you are looking for a short, Nvidia might not be the best case for that, but you have to look for where bulls are going to take profit. If you are a bear, if you want to lean short on a stock, you look for where bulls are going to take profit on their swings. Okay? Where would bulls take profit? At a level of resistance. And so once again, Nvidia is not a stock that you should be comfortably shorting, but the concept remains the same on any stock, except Nvidia, except these really, really strong stocks. The concept is that you go short on a stock where bulls start to take profit. Where bulls start to take profit is where bears start to enter their shorts. Because when bulls are selling, what happens? Bears are also, basically the price falls, right? So if the price falls, bears are like, oh my God, wow, we missed this entire move. Let's play it to the downside. That's how they enter. That's what you have to end up looking. That's what you have to look at the market. Okay, that's what you have to do when you're looking at the market. And because that is essentially what's going on in the market, it becomes so much easier to day trade intraday. So with that being said, because this was a beautiful opportunity to take profit, because the entire market ended up really showing monstrous strength into the morning, we were gapping up. Tesla gapped up. The Nvidia is huge. Nvidia gapped up. You have to start realizing, okay, the move to the upside can't sustain itself forever. There needs to be a bit of a pullback. And because that was a great opportunity to get a pullback, I leaned short the entire day. And it worked out. So you can see that just, this is not an automatic reason to be completely bearish on the market, right? But I want you guys to understand, especially if you're trying to day trade and become better at day trading, you need to put all of these larger time frames and all these pieces together, okay? I hope that makes sense. I hope what I said makes some sense. I didn't realize this was 11 minutes in. I hope this makes sense. Next, I'm going to talk about what the next steps are for the market, all right? First and foremost, let's go ahead and take a look at the VIX. The VIX we have to monitor because it's going to be an indication of where the market is going to go. As the VIX shows bearishness, the market should continue rising. Now, we have strong support on the VIX around 15 to 1550. What's going on the VIX right now is this is a bear flag that is breaking to the downside. If the VIX continues to break down lower, that means the market is going to continue rising. So currently right now, the VIX is showing weakness. Next, let's take a look at large tech stocks. What's going on with large tech stocks? We have to look at whether the majority of them look bullish or bearish. Microsoft, one of the worst setups. I was saying Microsoft looked very, very bad. Honestly, it's not a good setup. We are still trading below this bearish below level that I mapped out on Microsoft. This 431.50 level is a major level of resistance on Microsoft. Still trading below that. Not the best sign. But obviously, yes, the market gapped up. Everything was good today. We wicked above it. We couldn't hold above it. Okay. Meta, however, Meta did very, very well. It closed above the bullish above level that I was basically showing. This is the first day we closed above it. This is basically tapping at all-time highs. Meta can pull back down to around this trend line, around 615, 620 area. But this is very, very bullish on Meta. And you can see that there is clear resistance right where we closed on Meta. This is a fib extension level. But you can't argue with the strength. So even if we do get a pullback, the momentum is still bullish. Google closed below the bullish level. And this is not entirely bearish. Clearly not a bearish move, right? But until we get a close above the bullish level, that's when things become way more comfortable to be bullish. This is still very bullish setup. This is clearly bullish, okay? But we need a nice solid close above the 198.70 level, essentially. Same concept for Amazon. A lot of these large tech stocks, once again, like yesterday, they still have a little bit more room to go. And because they have a little bit more room to go, this is Amazon breaking out of a downtrend. This is the first day that it had a breakout. This could easily rip back above 230. Do you want to be bearish here on Amazon? Doesn't really make sense. There could still be a bit more room to go, in my opinion. Tesla, we already looked at Tesla. I think I sold a bit early. It is what it is, but we caught it down here at 386. So this was a really good trade. Tesla still has a bit more room to go as well. Am I long on Tesla though right now? No. We could still see through 430, 440. It is what it is. What else? Netflix does not look that great. We held the lows. It's not really moving much. It's not going to cause the market any trouble either. Last but not least, Apple. We still have to look at chips. So Apple that like I was saying yesterday, did it make sense to go short on Apple when it's trying to hold support like this? When it's just came off of a monstrous rip to the upside. Does it make sense to start going short Apple? Of course not. Of course not. That's why we got a little bit of a spike to the upside. We didn't, and I was saying, where would be the best point for at least a bounce? The 23.6% fib. I was showing how yesterday we didn't even break above the 10.1% fib. Over here, we didn't even touch the 0.1%. I was saying the 22.6% would be the best opportunity. We have to basically test that level. That's exactly what ended up happening. Worked out really, really beautifully. AMD also pretty beautiful. Obviously, because chips are doing well, leading into their news event happening this week. So AMD closed above the bullish level. This is very bullish, obviously. But now that we're getting closer to news, it becomes a bit more difficult to be aggressively bullish on these chips. And because it becomes aggressive, here's the thing. This is a point. So, all right, so just to wrap it up. Cool. A lot of these tech stocks look decent, right? They look decent, right? But now the problem is that if you did not go long down here the way that we did, if you didn't go long at the lows on support the way that we did, it becomes much more difficult to start leaning long up here, where Nvidia is skyrocketing outside of its upper level of the Bollinger Bands, where chips already made a move into their news event. It's not as easy of a long. I'm not short the market. I'm still holding on to Nvidia runners. I'm still holding on to the runners on SPY, QQQ, not Tesla. But I'm not short yet because the momentum is still clearly bullish. Now, how much more room to the upside we have, that is yet to be seen, whether or not levels of support get broken now. But we can still find our way up if Nvidia stagnates a bit. If the rest of these large tech stocks start to rally and the love goes out of chips, let them stagnate a bit into stocks like Microsoft, Google, Amazon, if Meta makes a new all-time high. This is essentially, it could continue rising and it could continue rallying. Where would be a good spot for really people to start leaning short is up here at the highs on December 26th, December 24th. Let me go ahead and show that on the SPY. Around 602, 603. That's essentially where you would want to start leaning short. And listen, like, it worked out really, really well. I had a clear-cut bias for a specific reason. I had a bias to the bull side for a reason. And then intraday this morning, the entire day, I had a bear bias on my day trades. Do I still think the market, is the market bearish? Does this look like a bearish market? We just gapped up and we're holding the 50% fib? No, of course not. Is this the time where you want to start going long? I wouldn't go long here. We got longs down here, right? I would not go long here, nor would I go short here. That's the issue. I would rather look for a short up here. If the market does fall, we missed a short. If the market does rise off this, we missed the long. But we didn't miss the long. I'm just saying, if you're not holding on to a position, smack dab in the middle of support and resistance, we're basically trading right in the middle. Correct? This is resistance. This is support. Is this a good risk reward for an entry? Absolutely not. It is what it is. The momentum is still bullish. We should continue rising. I would be surprised if we end up giving back all the gains now. I would be surprised. I would be kind of surprised if we end up breaking down the lows and filling this gap within this week. It could happen, but these are essentially, we really, for a continued move to the upside, The 590, 591 area needs to hold on the SPY. Taking a look at the NASDAQ. We got a close yesterday. Remember, we got a close yesterday above this trend line that we've been monitoring for so long. We got a solid close above it, and it worked out really, really beautiful. We got a gap up, and we closed above the 50% fib on the NASDAQ as well from the lows on December 20th. How perfect is it? And then just coincidentally, we got a tap on the 618% fib here, up here. The algorithms know what numbers they're looking for, okay? And this is not an automatic reason to be bearish. Once again, by all means, the NASDAQ can come back and retest the trend line. As long as it holds above the 518, 520 level, it's still bullish. But it's tough to randomly just, once again, you know, we're in the middle of a level of support, level of resistance, where you could even argue that we're closer to a level of resistance than we are to a level of support. Even shorting this, right? Risk reward wise, you're fighting against momentum on a lot of buying pressure. I would rather try to go long at levels of support than I would go short at levels of... That's not true. But what I mean is, when there's a lot of buying pressure, going short on daily time frames becomes more difficult. And that's essentially what it is. But regardless, you know, just from a risk reward standpoint, just bare minimum, we're almost in the middle. Taking a direction on either of these setups is not a good risk reward. Therefore, you would rather wait for a closer opportunity to a level of support or a closer opportunity to a level of resistance. The level of resistance here is around this. If we can really cross above the 618 and retest the 786% fib, bulls are going to find a lot more comfort in going short, basically selling all of their long position. This would also coincide with Tesla breaking above 430, 440. But that's the problem. Even then, here's the problem with going short. And there's another reason why I'm really, really hesitant to go short. I didn't enter into any swing puts, right? We were swinging long. I didn't enter into any swing puts yet. The reason why it's difficult to go short and to swing short at the moment, in my opinion, is because if the NASDAQ does, if the market does, if the SPY does, if Tesla does hit 430, the NASDAQ hits 533, the SPY hits 600, 602. If we get up here, if the market touches this, we're a rock's throw away from an all-time high. It's just screaming to want to make new highs. So that's why it's really, really difficult, even if we were to get up there, to be bearish. And I think the max pain for retail specifically right now is because many retail traders did not go long down here, trying to go long over here, definitely trying to go long at a major level of resistance, or going long at all-time high. A lot of retail, in my opinion, is going to end up missing this move to the upside if the move to the upside continues. That's my thought process. That's why I'm hesitant to go. That's why I was hesitant to go short today. Will I be as hesitant to go short at 532 at all-time highs? We have to see what the other large tech stocks are doing. We have to look at what the SPY would be doing at that point and what the IWM would be doing at that point. That's why it's very important to look at all these things all at once. That's, you know, and this is what we live for. This is what we do. And so far, you know, we've been playing it really, really well. And it's been a complete blessing how well things are going. So with that being said, I hope this was another fun video for you guys. I hope you guys enjoyed it. If you did, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you. Have a good one.